Hey, I'd like to welcome you to another episode of the Mission Matters Money podcast, your source for everything money. I'm your host, Adam Torres. You can follow me on Instagram at AskAdamTorres. Keep up with my book releases, book tour schedule, signings, all that other good stuff. Always love to connect with you there. And as always, if you'd like to apply to become a co-author of one of my upcoming books, just head on over to the website, moneymatterstoptips.com, and click on Become an Author to apply. All right, so today is a very special reunion 2020 episode. What is that? That's when I bring on a guest I had on in the past, and I liked him so much I had to bring him right on back. So today's guest is Bryan Schachter, and he's the Director of Strategic Investments over at Watermark Retirement Communities. Bryan, welcome back to the show.
Thank you for having me.
Oh, man, we're back. Happy 2020. I like to say we got the podcast family reunion going on, and I'm excited to get into today's topic. So we're going to get some updates for you on the from you on the senior housing market, and can't think of a better person to do it. But before we do that, let's get a little bit further into what you're doing over at Watermark Retirement Community. So first, just tell us a little bit more about the company, please.
Sure. So Watermark is based in Tucson, Arizona. Over a 30-year history of owning and operating senior housing communities across multiple states. So today we have 63 communities, including a few projects that are finalizing development in the next few months across 21 states, about 11,000 beds under management. Company is currently considered to be the 13th largest senior housing operator in the country based on beds under management, and my role is heading up acquisitions and developments for the company. So I work on all new business, acquisitions, developments, dispositions, joint venture negotiations, loan negotiations, et cetera, everything that from start to finish, from getting a project that we've identified and doing the market and financial feasibility through closing construction loans or acquisition loans, and then ultimately bringing in capital partners to provide the funding for the projects.
So, and that's why I said, you guys are huge, number one. Lots of beds, lots of communities, and you have a unique vantage point. So that being said, let's get into senior market, the senior housing market and its current state. So tell us a little bit more about what's going on, please.
Yeah, it's interesting. There's been a lot of, articles coming out about some of the headwinds within our industry. So a few of the big ones, there's been kind of a flood of capital into our market. Folks saw how well senior housing did through the recession. And so, private equity and REITs that really weren't investing in senior housing prior to really 2008, 2009 started playing in our space, in the last, call it 5 to 7 years. And that's continued to heat up as, returns on other asset classes like multifamily or commercial office really weren't, getting to the levels that they were seeking. So we've seen a number of groups that have entered our space, both on the development and investment side, really looking to partner with, groups like Watermark that have, a long track record of senior housing operating experience and success. So we're well positioned on that front. But what it's doing is, certainly changing some of the dynamics of the industry. So we're dealing with, oversupply in certain markets where there's been a lot of construction activity over the last 3 to 5 years, and the demand hasn't quite caught up to there. The other thing that we're seeing is, just a different view of how these investments are intended to go. So if you look at a private equity company, they're used to maybe commercial office or multifamily or student housing that, oftentimes can have a very quick lease up and, hold period where they can invest and sell within a 3 to 5 year time frame. And senior housing is just not necessarily that way. Sometimes it takes longer to lease up a building. It could be a multi-year process, so you're constructing it over a couple years, leasing it up over a few years, and getting it to season to the point where it makes sense to then look to sell to the next buyer. So sometimes those hold periods are a little bit longer in senior housing, and there's been some discussion about that and scrutiny from private equity that really aren't accustomed to the operational intensities of senior housing necessarily. The other thing that we're Watermark, as I said, is across 21 states. Probably about half of those have minimum wage increases that have taken effect. In a number of other states, those have been talked about or being contemplated. And so we have obviously really a heavy operational, staff level at each community. And so, people are across a wide spectrum of wage rates, and so minimum wage increases and, low unemployment absolutely affect us in a lot of different ways. And so, it's not just about, a server that's making minimum wage and their rate goes up, but it's also all the people that were making a certain amount relative to minimum wage prior to the increase. So what we call that is wage compression. So we're just, kind of seeing the ripple effects of, wage changes and low unemployment, so people being able to be pretty selective in what jobs they want to do. And so that, is putting pressure on the expense side of things. The supply question is really at times putting pressure on the rate side of things because, you're not in a position to really raise rates, if your occupancy isn't high or if there's, a new competitor that's coming in that maybe is nicer or better located than you. So there's just a lot of different factors that we're dealing with in every aspect of our business, and those will continue to evolve. Again, we're well positioned, with our track record and, kind of diversification across, different types of retirement communities and across multiple states. But, there's no question that we deal with all of these challenges on a daily basis.
Wow, you're dealing with a lot of moving pieces on this one, Bryan. So you're not busy in 2020. Yeah, right. Oh my gosh. So so they're getting you from all ends on this one. So let's go a little bit further into into private equity entering the space. So you mentioned there's oversupply in some markets, or not all, but in some markets. And that being said, how do you see this playing out? Not asking you to have the crystal ball, but how do you see this playing out with people kind of jumping on the bandwagon, so to speak, to try and chase those margins?
Yeah, it's really going to come down to whether people have the patience for, the volatility of senior housing. So, we'll see some groups that, understand or learn, how it likely is to go within this space, and over time we'll get more comfortable that it's not going to be, a straight line from start to finish necessarily. So, some groups will get up to speed and really get comfortable with that. And, it might be that some groups just aren't the right fit for senior housing. So we'll see some folks move in, some folks move out. We've already seen that. There's been a couple of groups that we've bought properties from where, they had been pretty gung-ho on building senior housing. And then, after a few years of doing it, they've just exited the space entirely because they just weren't, well equipped for it or weren't interested in kind of the operational intensity of it. So, it's an ongoing thing, but, there was an article in Senior Housing News this week specifically about this, which, was getting a lot of discussion internally within Watermark because, we work with 7 or 8 different capital partners. Some are new to the space. Some have been at this for a long time. So you see, all different types of personalities and views on how these things are supposed to play out. So it is definitely a fascinating time within the industry. For Watermark specifically, we've got a lot of projects that have all kind of come together at the same time. There was, call it 5 developments that we had been working on for the last 3 or 4 years. And in a perfect world, they would have spread out a little bit better, from a schedule perspective. But as it turned out, we have $750 million of development that is all opening in about a 6-month stretch. So we opened one here in Tucson just in the last couple months. We have a big project in New York City that's opening in April. One in Los Angeles that's opening in June or July, and then one in Napa Valley that's opening in May or June, as well as one in San Ramon, California, which is a little bit smaller deal, but may have been the most complicated of all of them for a number of reasons. So it's just an interesting time within our company, and we're excited about those projects reaching the finish line. But then, looking to the future, we also have a pretty healthy development pipeline, again, working with some great folks that, in some cases are newly entering the space and really interested to work with groups like ours. But, there's going to be a learning curve for them as well, just to, understand the, as I said, the operational intensity, the leads up schedule, all the things that, we've been dealing with for 30 plus years.
Man, that's awesome. And when you were listing those, I'm like, oh my gosh, you combine all of those openings with what you're getting from obviously the wage pressure, what you're getting from the others. I mean, I'm like, my head is spinning just listening to you, Bryan. So that being said, I'm like, oh man, thank God I podcast. It's cool. It's all good. So that being said, Bryan, if somebody's listening to this and they want to learn more about Watermark retirement communities, what's the best way, or to connect, what's the best way for them to do that?
Yeah, they can always reach out to me directly. Our website is obviously got some good info on, the history of the company, but, I have materials that show, what we've done, where we've been, where we're headed. My email address is Bryan, BRYAN, at freshwatergroup.com. So Freshwater Group is just the development and acquisitions arm of the company. Or on Facebook or LinkedIn, they can always reach out to me, Bryan Schachter. But, we're a very cards on the table company. Open to discussing all the positives that we're seeing, all the challenges that we're working through, and there are a lot of them on both sides of the equation. So it's an exciting time, just to add to the complexity that of all the projects that I mentioned to you, we're actually in the final stages of completing a sale of half the company to a group out of Singapore. So basically a major investment into Watermark, both, to pave the way for the next round of growth or reshaping of our portfolio, but also over time looking at international opportunities like in Asia, Europe, all over the place, where this partner of ours, Keppel Capital, has already has relationships and experience and capital to go out and look at projects that we wouldn't have looked at on our own.
Man, that's exciting. Great stuff. Love to hear it. Love to hear what's going on with you, of course, and with Watermark Retirement Communities and all the great work you're doing there. So awesome stuff. And so thank you for coming on the show first. And to the audience, as always, thank you for listening. Without you, there's no show. So keep listening. Subscribe. If you're watching this on our YouTube channel, Mission Matters Money, then be sure to subscribe to that channel, but also give us some comments in there. Love to hear your thoughts on what's going on in retirement, community housing, or in real estate in general. Give us some comments. Love to keep the conversation going. Don't let it stop here. And Bryan, thanks again for coming on the show.
My pleasure. Thanks for having me.